welcome back to the Bizcast. Today we're joined by Nick Main, a current investment banking analyst at Piper Sandler in the MedTech team. Nick graduated from the University of Bristol with a bachelor's in history before studying a master's in geopolitics, territory and security at King's College London. After finishing his studies, Nick moved to Deloitte to join the graduate program in market assurance, and after 2.5 years, switched to their corporate finance department. After another 2.5 years at Deloitte, Nick moved to Piper Sandler to join the investment banking division in the MedTech team.
Yeah, so just getting started, was there any sort of thinking behind studying history? Were you sort of thinking maybe doing some sort of law conversion after initially?
Yeah,
Or
yeah, spot on. Yeah.
yeah,
Um, it was history was always the subject I was most interested in at school and one of the luxuries I think we have in the UK is you can study whatever you want and it doesn't really apply to
yes,
anything down the line. And
yes,
I've spoken to colleagues, especially at Piper Sandler, who, econ, management, etc.
yes.
So that was a nice luxury to have. I had a really good 3 years at Bristol. And I always knew that I could potentially do a law conversion or something like that. I was thinking of civil service.
Okay.
I was I was keeping my options as broad as possible. No one really excludes, or no one really excluded based on your degree for grad job applications. So that's obviously quite a nice luxury to have. Yeah.
Yeah, I was going to say, I think that's a really important point, kind of choosing subjects. A lot of people think when applying to these roles, you need a finance degree, business degree. If anything, it sort of sets you apart. So you went to study at King's. Was it geopolitics?
Yeah, so I did a really interesting module in my last year of history about geopolitics, and it felt like a nice option to
Yeah.
spend a year in London doing. I think 3 years is maybe not long enough to be at uni, so I kind of always wanted to do a master's on the end of it. A really enjoyable year. Got to live at home in London. Um, meet a whole new group of people. Whole new university experience being in London. Really enjoyable course. Um, yeah, I mean, I wouldn't say it was a panic masters, but I wouldn't say it wasn't a panic masters as well.
Okay.
Um, we'll probably talk about grad jobs down the line, but it seems like a natural place to start talking about that because I found it very difficult to apply for grad jobs. Potentially a function of I wasn't really sure what I wanted to do, and I felt that being more qualified would give me a leg up potentially.
Yeah.
Um, and I was also hoping it would kind of focus down what I wanted to do. But 6 years after finishing my masters, I'm now in investment banking. So quite not sure it worked out quite as I expected. Ironically, I actually worked for the Sunday Times final year graduate survey.
Okay. Cool.
So I thought so I knew what was going on in terms of grad jobs, but I think for whatever reason I wasn't particularly good at applying for them. Yeah, but I think it was tough. It was tough when I was applying 6 years ago. I dare say it's a lot tougher now. I don't know why. It just seems to be that way.
And then, so in terms of the sorts of roles you're applying for graduate jobs, like I think you said before, you've sort of just kind of you're keeping your options open, sort of a range of different things. So what
Yeah,
sort of different kind of sectors?
I can't really remember to be honest, but I think definitely big four sort of things,
Yeah.
big, big FTSE company grad schemes. I think when you're doing a degree at the same time as applying for jobs, it's definitely not easy. You have to spend more time than you want to on making sure your application's sorted and it actually makes sense. And I think potentially I could have spent a bit more time doing that. But I didn't.
Yeah.
But I'm here now, so it's all
Yes.
worked out.
Yeah.
But I think one of my big regrets, actually at looking back, was definitely not spending enough attention on thinking about what I wanted to do. I sort of potentially thought that it would be okay in the end. I wouldn't have to put too much work into it. Um, that was obviously wrong. And I wish I did put more work into it. And I think anyone who's listening to this podcast, you're part of the Bristol Investment Banking Society and you're doing the right things. I would say keep doing those right things.
Yes.
And it'll be a lot easier than it was for me.
Um, so just moving over to Deloitte, what sort of attracted you to that grad program?
Yeah, so I think out of the big four, Deloitte was the one that always was the most attractive. The interview process was pretty smooth. I
Yeah.
had a really good chat with the hiring partner, and that sort of tipped the balance towards that. Like a really good interview with him. I felt like I could work with him, and
Yeah.
I think that's really important when
Yeah.
you're
Yeah.
thinking about every job you go for, because you hear stories on the floor and in previous jobs about there's always someone who hated a previous boss, and so far I've never had that, and I don't want to ever have that because
Yes.
you can always go for
Yeah.
some other job. Yeah, I think having a manager and a boss that you like is so important. But yeah, it was that big four element and the training they give you, and being able to say you work for one of the biggest companies in the world, I think is also pretty attractive. It was a fairly common route. The one difference with the assurance grad scheme versus the audit grad scheme at the time was that you didn't get fed through the ACA course on the assurance route.
Okay.
They've
How's
changed
that?
that now.
Change that now.
Changed that
Yeah.
now, so everyone does ACA. Yeah. Uh, and I think at the time I kind of thought, oh great, I don't have to put as much effort into you know more exams or more exams, right? And I
Yeah.
think, and I probably realized that that was the wrong way of thinking about it. Again, continuing the theme, I was too late on the audit grad scheme anyway at Deloitte, so I couldn't get on that. But then after 6 months, I realized that I needed to do some sort of qualification. So, and the long term view, rather than doing an ACA and being stuck behind everyone else doing an ACA and being part of the 500, 600, 700 strong battalion of people at Deloitte who are doing the ACA.
Yes.
I'd do the CFA and with a view to sort of slightly differentiating myself. Again, and Deloitte were very happy to push me through that, which was very fortunate. But again, it's part of that, big four cultures that you do your exams and everyone understands it. Everyone gives you time for that,
Yeah.
and that was really important. The experience of working for a big company as a 21-year-old, 22-year-old is quite daunting, but the training they give you is
Yes.
brilliant, and that's why you do it. That's why you
Yes.
definitely do it.
And also, it's
And
quite
it
nice
is
having like a large cohort because obviously I interned at PwC this summer, and just having sort of other interns who are actually in the same position as you is quite nice. Just sort of
yeah,
kind of bouncing ideas off each other, and especially during audit, during busy season, I'm sure it'd be quite nice kind of having that the sort of camaraderie of it. So yeah, no, it definitely is.
it is. It
It's a
is.
great place to start.
Yeah, yeah. So we had in the assurance grad scheme, we had it was the first year they did it when I joined. So I think we had 25 in insurance, and then there was obviously like 200, 300 in audit. So that was really
Yeah.
good to have. I think in my specific team in markets assurance, we had five, um, which was enormous. So
Yes.
that's a lot of people, that's a lot of grads in one team. And that was great, and I'm still in touch with them.
Yeah.
It's interesting seeing where we've all ended up. We've all ended up in very different places.
Yes.
5, 6 years down the line, which is again, it's testament to the big four.
It'd be interesting to hear like a little bit more about sort of comparing. I mean, we've already spoken about it a little bit already, comparing audit to assurance. Obviously, audits do they used
Mm.
to have to do the ACA, assurance didn't. But can you sort of talk me
Mm.
through how the role differs?
Assurance is typically controls testing, but in at Deloitte it was slightly different. We focused more on kind of big key regulatory themes and trends. It was more consulting rather than auditing. I think that's the
Yeah.
closest you could potentially compare it to.
Yeah.
We did a lot of work with the financial consulting team, or the financial services consulting team at Deloitte. And one of the big projects I did for a while was on LIBOR transition with a major GSIB bank. Again, really interesting to you're in it's a sort of middle office focused regulatory transition, strategy transition sort of role. That was really good exposure. There was a really broad role, very different to sitting looking at balances and trial balances and
Yes.
working out why they don't
Yeah.
connect. So yeah, it was a very different exposure to that, and I'm pretty happy I didn't have to do that because I did a few busy season audits. We often got seconded on to busy seasons to fill a gap and stuff. And I did a couple. I think maybe two busy season audits, and it was pretty tough. Right, it's pretty tough. But
Okay.
again, as I said, camaraderie is quite important.
Yeah. If we then transition over to corporate finance, so was it after about two and a
Yes,
half years, you moved to the corporate finance department? Was that always something you were kind
yes.
of had at sort of the back of your head? You thought you kind of might want to sort of consider?
Yeah, I think definitely at the back of my head. One of the other attractive things about Big Four is that the ability to move between service lines.
Yeah.
You're not wedded to a particular service line. Is that true? No, obviously, I mean you are contracted to a service line,
Yeah.
but there is
Yes.
the ability to move. There is ability to move internally,
Yeah. Yeah.
right?
Yeah.
And people do.
Yes.
A very common pathway at Deloitte is audit to transaction services. I know so many people who were in my group of um, new joiners who are now in transaction services. Really common path. And I ends up in the lead advisory role, M&A focused role. It felt like the right thing to do. It felt like something I wanted to experience.
Yeah.
Again, like long term was important to me. Um, I wanted something different. I wanted to make sure I experienced a couple of different things at Deloitte before I moved on. Um, the role at my level came up, and I went for it. And I was at the time I was still applying. At the time I was still doing my CFA. I think I was on level 2 at that point. And as I said earlier about the sort of differentiation of my application, I felt that put me in really good stead
Yeah. Yeah.
compared to probably hundreds of ACA people who are trying to go for the same job. I don't know. I obviously don't know if it helped or not, but it's probably quite nice
Yeah.
to see loads of different CVs and then see someone that's different.
Yeah.
That was a really good interview process. I think I spoke to 5 or 6, 50% of the team in various guises. Surprise interviews,
Oh,
modeling
right.
tests,
Oh,
etc.
wow. Surprise
Yeah,
interviews.
all good.
That would definitely
Yeah,
caught
there,
me
there
slightly
was
off
there was
guard.
one there was one. Yeah, it did catch me slightly off guard. It was a Friday afternoon, and it was with one of the directors who was going to become partner in the next year. I kind of knew it was meant to be like an informal chat, but at the same time, I also knew
Okay.
in the back of my mind that it was definitely not going to be an informal chat. It was him kind of seeing, can I actually work with this person?
Yes.
It was fine. I got the job. It was a really good, really fun team to be a part of, the healthcare and life sciences team at Deloitte.
Yeah.
Um, really good track record. Again, a proper melting pot of backgrounds and people. We had the guys who did the ACA route. We had people who came from in-house corp dev roles.
Okay.
The One of the partners, he worked in pharma commercial marketing sales for a while, then
Oh,
came
wow.
through the
I've
investment
seen that a
banking
few
route.
times.
Yeah,
Yeah. Yeah.
so
It's like one of those
really
sector
good, really
specialists.
good. Yeah, yeah. And he knew his stuff. He was a
Yes.
brilliant, brilliant, brilliant boss. Because I'm not a scientist by trade, and I didn't even do A-level science, for goodness sake, right? So a lot of the stuff. And again, why are you applying for life sciences M&A role, Nick? But the ability for me to be like, I don't understand this, and he'd go, oh, this is how it works, this is how it all fits together, was really important.
So you said obviously you chose the life sciences team. Were there sort of several different openings across sectors? So was it like sort of a little bit of a conscious decision, something you sort of wanted to do, or more that was sort of where they were sort of looking for people at the time within M&A?
Yeah, I think a bit of both. I think, as I said, that the healthcare life sciences team had a really good track record,
Okay.
award
Yeah.
winning. If you look at the
Yeah.
Languisson Awards, you look at the Health
Yeah.
Investor
Yeah.
Awards, Deloitte's always there. So why would you not want to be a part of a winning
Yeah.
team? And I do remember the second, there were 2 partners in the team, and one he retired a couple of years ago now. But I remember before I joined, I had a coffee with him, and I said, "Oh yeah,
Okay.
yeah, congratulations on winning the award." He went, "Oh, it's fine, we win it every year," which I thought was brilliant. I
Yes.
sort of, I don't, we don't really care. We do it every year. And yeah, they were really busy during COVID. The healthcare sector went crazy during COVID.
Yeah.
They needed people at that grade. And then also at that time, 2020, 2021, people were moving everywhere. I also knew at the back of my mind that at that time, 21 into 22, the markets were starting to slightly fall away. And I think, inflation was properly kicking up at that time. The war started, Ukraine, Russia, all big macroeconomic events that, I almost felt that hiring for M&A would drop off. So I felt like it was my opportunity to move across.
Yeah, for sure.
At that time, or not be able to for a few years. As I said, people's backgrounds made it really easy to join that team. I felt part of the team straight away. But I had a great vibe straight away. Really happy with that decision. And it was a really good 2.5 years there. They were very supportive of me. With my CFA, with personal issues I had during that time, which made it difficult at times. Really great support, really great training, really great exposure as well to some good deals. Which is kind of all that you want.
Yes, actually, yeah. So that sort of brings us quite nicely onto that. I was curious about the different sorts of transactions you were working on. So, in terms of, was it sort of mainly sort of buy sides or sell sides? In terms of because am I right in thinking Deloitte kind of encompass quite like a large range of like kind of deal values? What sort of stuff were you working on?
In the healthcare life sciences team, it was pretty much exclusively sell sides. I know the business services team did a lot of buy sides. I don't know if they still do. But we did a lot of sell sides. Buy sides, you don't, no guarantee you're going to get any money at the end of the day. And for a firm like Deloitte, you need to get money in, right? You can't be risking. Just the way that the company works. But no, in terms of deal values, you're right. It was an enormous range. Some of the regions were doing, sub 10 million EVs. We were playing in that probably 10 to 100 range. No, 10's a bit low. Let's say 30 to 100. And then with forays into 100 plus. Couple of pitches we were pitching for that higher range. And some other deals that we did or were doing when I left. I don't know. there was some quite big deal values. But mainly sell side, founder owned businesses. Looking for the first transition into private equity or strategic players. That was the sort of area we typically worked in. But again, there was still, especially in healthcare, specifically social care groups who'd already been in private ownership for a couple of years or a couple of turns, moving at the end of the 5-year PE fund horizon, moving on to somewhere else. So there's a bit of that as well. The deals I worked on were life sciences deals. I completed 2 at Deloitte, both in life sciences. One was in the pharma commercialization space. Really interesting AI business, AI machine learning business, and the other one was a peptide CDMO. Don't ask me what a peptide is; I can't remember.
I can tell you either.
Again, two really interesting founders, really interesting people, incredibly good at what they do. A pleasure to work with, and grateful to have that experience. And it was pretty much on day one I got thrown into a deal from the very start. Which was nice. I was able to see that transition from pretty much the start to the end over the course of a year. And again, that was all going on when the economy was, starting to tank, and Liz trusted her thing, and the war was kicking off, and inflation was at 45,000% and whatever it was. And I was so lucky to be on that deal that actually closed, because everything else was just falling by the wayside for various reasons. It wasn't anything we were doing wrong. It was just circumstance in the markets. But again, obviously as a junior, you're not closing the deals. You're not expected to do that, obviously. And what you get put on is pretty much a circumstance of luck. And there's only so much you can do to help a deal close because you're not in that position to. So one of the things I would say is, if you're in an M&A focused role, you're not closing a deal after a year. It's one of those things. It is absolutely not your fault. It is
Out of your
absolutely
control.
not assigned to jump ship somewhere else.
Yeah.
It's completely out of your control. There was someone at Deloitte who was there for 2.5 years in a different team, and she didn't close anything enough in her 2.5 years. I think she's now at A&M in the corporate finance team. So, it doesn't affect anything.
So you said a lot of sort of founder-owned businesses. That's probably, I always think that's
Yes.
that's quite a nice kind of area of the market to work, because you sort of feel like you're having more impact. Because obviously it's like, for
Yeah.
them, it's probably it might be the only transaction they've sort of ever done so far. So after Deloitte, I'm right in thinking you had a bit of a kind of break in between kind of ending Deloitte and starting at Piper.
Yeah. Yeah, I did. I didn't really have the opportunity to do a sort of, gap year
Yeah,
after uni, because I went straight into a grad job. Then COVID happened, and it felt like a really good time to do it. Personally as well. I'd had a bit of a tough year before.
yeah,
At the same time, I was 27, and this will be my last opportunity to sort of
yes,
do whatever I want before everything happens down the line. You get a mortgage and you get kids, and all
yes,
that stuff. All that
yes,
stuff happened. Yeah, took the decision to leave Deloitte with regret. It must be said. I felt like I was letting them down in some ways. I felt like I was quite selfish, because I wanted to do this. I didn't apply for a sabbatical because I didn't want to. I didn't want to, take 4 months off, come back, and then leave.
yeah,
That didn't feel fair.
mm,
That didn't feel fair for me.
mm,
They were quite comfortable that I'd done that, because it wouldn't be letting them down.
yeah,
At least if I left, they'd be able to hire someone else.
yeah.
Yeah, and I had a great time traveling around the world. Went to Central Asia, Pakistan, Caribbean, bits of South America. Did what I wanted to do.
Very nice.
Um, scratch that itch, I suppose,
Yes.
and then came back and started applying for jobs again, which was a lot tougher than I imagined, actually. Really tough market at the start of the year, as it has been for 3 or 4 years now. It's not getting any easier. I think Trumponomics,
Yes, I think that's the
whichever
one.
it
Yeah.
is.
Yeah.
The tariff uncertainty made it very difficult for people to actually know what they want to do in terms of hiring. There weren't many options open. There weren't many attractive options open.
Yeah.
I had a couple of interviews at other investment banks. That a bit of both was I what they wanted. I don't think I wanted to join them.
Yeah.
There's a bit of both, but again, I think when you're comparing yourself to other people who are applying for these jobs, it's much easier to differentiate yourself now than it was 5, 6 years ago. And I think it is a little bit easier to interview when you've got a few years of experience under your belt, because you know what you want, you know what works for you, you know what doesn't work for you,
Yeah.
and quite quickly you realize what those teams are like, in both senses. Piper it felt like a very natural fit. I spoke with the managing director. I think my first interview was with the managing director,
Oh,
which
wow.
was, and again, I had no idea what to expect.
Yeah.
That isn't typical.
Okay.
And I had a really good conversation with him, and then had a few conversations with the associates, the analysts, and the VP, based out in America, and it just felt like a bit of a no-brainer, to be honest. Very similar sort of culture to Deloitte in terms of the people you're working with, and the attitude, I suppose. Difference being you're obviously working harder, longer,
Yeah.
more intense, bigger deals, etc., etc. So that, again, use that camaraderie you mentioned earlier is so important.
Yeah.
You want to be happy with the team you're in. You want to be enjoying the time you spend with them, because you spend 70, 80, 90 hours a week with them.
Oh, yeah.
So you want to get on.
Yeah.
And it felt like, at the age of 27, 28, I could, do this investment banking role for a couple of years. If I didn't like it, I could leave. But I felt like I wanted to take the risk of just seeing what it was like, seeing if I could do it. People, my friends, my old colleagues kind of warned me a little bit in terms of, do you want to be doing this? Do you want to be spending 80, 90 hours of your week working in a very intense environment for a team that you might not like? Which is obviously, it's nice that people are looking out for me. I was quite keen that I would try and do it, just see what it was like.
Yeah, 100%.
And fortunately, 3 months in, 2 months in now, it's gone very well so far, and I really cannot complain.
Oh, fantastic.
I remember actually this week I was leaving the office about 7:30, and I was getting on the tube and thinking, my God, this is really early. And I was thinking, actually, Nick, this is a typical leaving time for the vast majority of people in their jobs. You sort of get into the sort of 10, 11 o'clock, and you're commuting back on a very quiet tube and everything. But no, yeah, a really good experience at Piper Sandler so far. They're as obviously an American bank expanding into London quite heavily, quite strongly. MedTech is one of their bigger franchises. Enormous MedTech team in the US. I think they had something like 11 interns in the US alone, just for MedTech or something insane. I know, it's incredible. The wider healthcare franchise of Piper is enormous. So there's healthcare services, there's pharma services, and then there's the MedTech team. And there has been a conscious decision to move a team to Europe to just do mainly European focused deals. There's a lot of German businesses. For example, a very big manufacturing hub in Germany. So it makes sense to have a European presence. But again, we don't just focus on MedTech. We can just go wider into the sort of hospital consumables sort of thing. And there's obviously amazing, we call it high tech MedTech ideas that come through these incredible businesses that may not make much money or any money at all, but long term it's an interesting business. So we have a dedicated MD in London for just MedTech. We have a dedicated team for just MedTech. So everything we do every day is just MedTech, which is great. I think at Deloitte, I was obviously doing all of healthcare and life sciences. So healthcare services, from care homes to pharma commercialization to drug discovery. It was very broad. This is much more channeled on MedTech. But again, there's obviously nuances there. There's contract manufacturing organizations, there's product-based businesses, clinical research organizations, service businesses, high tech, MedTech. There's lots to get stuck into. And there's more of a international feel as well compared to Deloitte, which was very just UK focused. Here we've got all around the world, which is exciting and very different as well.
Would you say there are sort of any sort of differences between the types of transactions? Obviously now's MedTech rather than life sciences, but in terms of the sort of size of the clients or
at Piper it's typically much bigger deals than at Deloitte. That is probably the main day-to-day difference. More private equity backed businesses, less founder owned, but obviously you've still got those, you might have those founder management teams within the PE backed business. That's the main difference. I think in terms of day to day, it's very similar, just longer. I wouldn't say there's a huge amount of difference at all. There's a lot of, I don't know if this is just my team, there's a lot of trust and independence. I think because we have a smaller team, you're sort of trusted to just do the work. You'll do it. There's, I don't know, this may not be typical for other teams and other banks, but I really feel that sense of trust and responsibility to do a good job. I've been hired to do it, so why not do it?
So you would sort of go back to when you were, studying your masters at King's. Is there sort of one bit of advice you'd maybe sort of give yourself kind of regarding the whole kind of graduate recruitment or kind of just an overall bit of career advice?
Definitely. Don't get hung up on job objections. They may seem hard at the time, may seem unfair at the time, but at the end of the day, there's no guarantee people even looked at your CV. There are so many CVs people have to sift through, and I know you put a lot of effort into every single job application that you go for. it just might not have been your day in an interview. It might not have been your day for someone looking at your CV. There are plenty more opportunities elsewhere.
Yeah.
And if you've had 3 or 4 in a week, it's fine. Your luck will turn. There's a quote that I like, which is, don't let anyone ever get you down because only you know your true potential. And I think it is very true. If you put your mind to something and just work hard and just go for it, run with it, you'll get there. You will get there. It may take a bit of time, but trust the process and back yourself.
I remember you said, so within the life sciences team at Deloitte, you said there are people who have sort of, come from working in industry beforehand, and there are sort of so many different backgrounds. So it's not just a case of a straight path going, kind of getting a graduate job in industry and staying with it.
No, absolutely. I mean, I think my career is testament to that. And accidentally, I've ended up at an investment bank when 5 years ago I wouldn't have believed you. And now I'm seeing it with the summer analysts in particular. I'm seeing these people who are coming in through their second and third years of uni and doing 8 weeks with us. And I just think, oh my goodness, I was nowhere near as clever as you, or I was nowhere near as keen on what I wanted to do and set on that. And I'm quite grateful I didn't have to come through the front door for that graduate investment banking process, because I think it's pretty tough. And I've come through a bit of a winding path and ended up through the back door, but I'm at the same place, and I've had a very different experience in the last 6 years, and I think that stood me in incredibly good stead. I know what I want to do, and I know that I'm very happy where I am, and it's taken a bit of time to work out exactly what I wanted to do, but I said earlier, I slightly regret not putting more effort into it at uni. But at the same time, I've had a really interesting career. I've met some amazing people, and I've worked for some amazing people and amazing bosses. And now I've ended up at an investment bank. So yeah, there's lots of different ways of getting to where you want to go. And even if you're not getting to investment bank straight away, you can do other things and still get there. 2 years doesn't really mean a lot when you work for 45 years. 45 years is maybe a little bit too many. 40 years, 2 years. It's 2 years. You might become 2 years after you wanted to. Okay, who cares? It's not the end of the world. There's more important things. It's just a job.
Yeah, Nick, thank you so much for your time today. And then I think that the whole thing about sort of there's not kind of one linear route into the industry, and there are lots of ways to get there. I think you're sort of testament to that. So it's been really great speaking.
Yeah, good. Yeah, no, I really enjoyed it, and thanks for giving me the opportunity.